1, 2. Good evening, everyone. Good evening. Good evening. Hello, guys. How are you doing today? Let's bring the energy a bit higher. Come on. How is everyone doing today? Are you guys all right? Okay. Krishna said, great to see you. Nice to see you too. Thank you. So, come on. Where are you watching us from? Let me know. Please, please, please. Let me know. Will be very interesting. So, a lot of messages. Divan said hello. Donna, good, doing good. Philip from Poland, ready. Fatma said ready for the new week. From Italy, nice. Krishna from London, UK. Sunat from London. Okay. Ricardo from Portugal. David from London. Mohammed from Indonesia. Lucas from Portugal. Hawaii said hello, Theo. Hello, back to you. George said from Austria, nice. Adam from UK, welcome Adam. Calvin from Turkey, welcome Calvin. Zoom user sent from Denmark. Aman said from London, Switzerland. Ivan. Adriana said from Slovakia, Yassas, hello. So, and of course, everyone else. It's a privilege and pleasure and honor to host another webinar for you. I hope that every single week you find the webinars valuable. They are very informative. Hello from Dallas. Boris said hello. Just to make sure that everyone understands that this is for education purposes only, and it's not intended to provide investment or personal advice or any kind of personal recommendation. So, for those who see me for the first time here, allow me to introduce myself. Away said, so far your group is the best. Oh, thank you so much. Abdullah said hello and said, I'm from Italy. Nice. What do you mean? What do you mean? And can you please tell me again? I quite don't understand what you're trying to say. So, who is here for first time? Who is here for first time? iPhone said me. Marco said me. Nice. Okay. Hello, Frederick. Sunat. Oh, too many people for first time here. Awesome. So I assume if here it's your first time, you also see me for first time. So allow me to introduce myself. My name is Theo. I'm originally from Cyprus. I built up my trading career in the beautiful Australia, in Melbourne and Sydney primarily. And I haven't seen anyone from Australia so far today on these webinars. So, yeah, I'm in all social media, anywhere you can find me. You can follow my account on LinkedIn, or some people, they ask me, how do we know is that you and you have everything? Just check out my LinkedIn, or you can follow me on Instagram and or any other social platform. So What do I do in the markets? Well, I'm a certified financial technical analyst. I hold the certification that issued from the Society of Technical Analysis in the UK. And I'm also a certified market technician. I hold certification that issued by the International Federation of Technical Analysis. So I do have 12 years experience in trading. I have to update that, but it's okay. And I specialized in CFD trading primarily. I trade, most of the times I trade the commodities during the New York trading sessions, but also, of course, the currencies when I find my trading plan is applicable. And I, of course, will show you what trades, some of the trades I placed last week on my account and all this stuff. And questions, please let me know on the group. Or Debo, where did you send messages? I can forward that message to the team because I'm not receiving any messages when you send that support. I only receive messages when you send them in my personal account. By the way, guys, because some people, they ask me to record, Luis, thank you so much. People, they ask to record these sessions. Now, just allow me to, it's hard for me to say no because the sessions, they are uploaded directly on the YouTube channel of Elevating Forex, so you can get them from there. By the way, for those who are new here or you are already there, allow me to let you know that in case you want to learn something, you want to learn about trading, if you want to improve your strategy, or if you want me to teach you how to trade, it's something that I can help you with, and you can send me a message and you can we can discuss and explain you how I can help you. How do I get the certificate? I was studying a couple of years and I passed 3 exams to get the certificates and the awards. Okay. So on a daily basis, I deliver market analysis to prop firms, to some hedge funds, and to individual traders that they want to know everything about. There are traders, they trade only one currency or one pair, and they want to know how it's going to move on a daily basis. So I create summary and the chart example to help you go through all your stuff, and also the news of the week. Now, I also publish some articles in financial magazines, like this one about the oil, and I have the privilege and honor to host webinars exclusively with traders like the John Bollinger. If you ever heard the Bollinger Bands, it's the creator here. Steve Ninson, who introduced us to the candlestick, the Japanese candlestick. We know them primarily because of his work. Okay, and we had another webinar here. And Mr. Collins from the UK, that he's expert in volume trading, about mindset with George Fraser from the US, and from Greece and the UK, Mr. Alex Spiroglou. So let's dive into the markets. Enough, Theo, with this stuff. Get us into the markets. Come on. Hello, King. Welcome to the webinar. So this week, finally, we're going to start looking some directional moves on the major currency pairs, because it's been a while that we've struggled with the major currency pairs. Okay, because if there is no good definable direction in the market, it's very hard to have a solid execution. What do I mean by that? Those who are here for a while, they already know how do I do the analysis, how do I do the execution. I look on the weekly time frame to find the direction, and because I like to watch a lot of currency pairs and commodities and indices, it's impossible for me to watch 30 markets on a single day and take trades on the 5 minutes or 1 minute chart. I have to trade takes on a higher time frame. So in order to keep everything, and the reason many of you, they don't really understand. Oh, Iva, thank you so much. Appreciate that. Thanks for the reminder. Here it is. So because many of you, you are new to trade, you are new to trading, obviously, but what is the reason I use the weekly chart for analysis and I don't use the daily chart? The only relevant higher time frame chart in the market to do analysis that it's going to be valid for 1 week, it's the weekly chart, because the weekly candle is the only candlestick that closes for 2 days. There is no candlestick that closes in the market. The markets are constantly moving. Only on gold and on some commodities, let's say we have 1 hour close, okay, between the transition from the New York to the Asian trading session. But the actual reality of what we can speculate and what we can focus on is when the candlestick really closes and we see, okay, this candlestick here was valid for 5 days. Now the market is closed and I can expect something on this candlestick. Okay. So that's why I use the weekly time frames for do the analysis. It's not that I just decided one day I'm going to use the weekly time frames. It's after hours and years of trading activity and understanding how the forex market works. So on the euro US dollar, the price is in an overall uptrend. Last week we were expecting the price to decline a little bit, but it came until this area around 1.10. That's a critical area for the euro. It found support, it bounced off, and it ended up as a kind of bullish candle. It has bullish implication. Mohammed, I do use the Trading View chart. You can access them for free online from your browser, or you can download the application. I prefer to use the application. Okay, so I'm looking for long opportunities on the euro US dollar. How am I going to enter the market? I will go down to the hourly time frame and I will wait to see, as the market started making higher highs and higher lows, and it's a definable, and the market is defined as an upward trending market. At some point, now the market started making lower highs here, lower lows. So at some point, the price will break above this trend line and it's going to keep rallying. If the weekly chart, it's going to be, let's say, accurate, then we're going to see that move towards. Now, what is something you need to keep an eye on that? And on all this stuff I can teach you, that's not a problem at all. The fundamental side is, the fundamental part is what really moves the forex market. Okay. Now, on Wednesday, the Fed will report interest rates. So when the Feds report interest rates in the US dollar experienced an immense volatility. So as per the forecast, the interest rates are expected to be cut. So the Feds are looking to cut rates, which means most likely, the US dollar will get weakened. If the US dollar loses value, it means the euro against the US dollar, it's going to move upwards because it's at the first, it's what we call the base currency. So if the US dollar will drop, we expect the euro to rally. So we're going to see the pair to move upwards. Now, this We expect this to happen on Wednesday, and the markets will be anticipating that. How can we trade that? The event actually, I don't tend to trade it, but I'm going to be very alert. Maybe we can use some Fibonacci retracement to measure this move from this point here, that was the last swing low, to the last swing high, and find out the 61.8%, which is somewhere there. All right, and try to find entries here. The way I enter, by the way, I shared some of the price action that I used to trade. I share it with many of you. If you haven't received it and you want to receive it, oh my God, I need to let you know how to get it. Just give me 1 second. In case you need to receive it, you can, okay, you can let me know and I can send it to you. So yeah, that's fine. Just let me know to send you the candlestick patterns, and I will just make sure to send it over. So what we ask, do you use MetaTrader 5? Yes, I do use MetaTrader 5 to place my trades. I do not use MetaTrader 5 to do my market analysis. I use the trading view. Okay, the MetaTrader is purely for execution purposes. I have all my accounts connected to MetaTrader 5. Yeah. So let's move to the next one. It's going to be the Great British Pound against the US dollar. Similarly, on the weekly chart, of course, the Great British Pound against the US dollar is in an uptrend. And last week, we saw a reversal price action here. So after that, we do expect the market to move upwards. So how can we trade that? Well, if we again go on the weekly time frame, we're going to see that the price start around there. If we're going to find a kind of spring formation or a bullish engulfing, definitely we can look to go long in the market. Now, if you are new in trading, I will encourage you, if you're going to use hourly or 30-minute chart, to use the 50-period moving average. It's going to make your trading much easier because you're going to see the price is above the moving average, and then you know that most likely you are looking for long opportunities. Just as a rule of thumb, okay, we don't trade the moving average or stuff. Last week, I got a good trade on the euro pound, on the pound US dollar, and that was on the hourly time frame, and I just kept it here to show you because last week, based on our analysis here, we said that this price action on the weekly chart has bearish implications, and we're going to look to go short, and that's what I was looking actually, because to be honest, nobody knows when the trend will change and the market will transit. So here, the price was making lower highs and lower lows. I found my price action during the New York trading session where I primarily trade, and I enter short at the close of the candle. I put my stop loss above the swing high here, and I put the take profit just above the previous swing low. That was 1.7. It means risk 1 to make 1.7. Usually, I don't take trades that they are below the 1 to 2 reward to risk, if you know what I mean by that. But if there is an opportunity to make at least 1.7, 1.8, I will take the trade. Okay. So for this week, I will primarily be focusing to find long opportunities. If you see the price start making lower highs and lower lows, don't rush to buy the dips. Wait for the price on the time frame you will trade to change its market direction. That's a key information, and it's gonna transform your trading if you pay attention to that and you start doing it. Next one, USD Japanese yen. Last week, again, it was a very, very sniper entry, that one I can call it, because on the weekly chart, remember, for those who were here, we said we're going to be looking for what? For what? For short opportunities, because the weekly was down, price action was a bearish engulfing on the weekly chart, which means we wanted to go short on that one. Short means to sell the asset. So on the hourly time frame, during the New York trading session, I was looking to find a ways to enter the market. As you see, the price started making higher highs and higher lows on the hourly time frame. So I drew the upward trend line. And after the price broke under the trend line, it went below the 50-period moving average. I was looking to find my entry. And the entry was the bearish engulfing here. Again, I entered at the close. I put a stop loss above there. And that was a 2-to-1 trade. This is how I trade. And I teach you this stuff here. Next one, Australian dollar, US dollar, was a good trade, this one as well. I also had a couple of losing trades. Like every week I get losing trades, but I try to close my week positively because I trade large accounts, I trade also prop firm accounts, and I'm very careful with how do I approach trading in general. So what do we see here? The price on the Australian dollar, US dollar, let's go on the weekly chart first. On the weekly chart, that was in a trading range, okay? The price doesn't go anywhere. It's like it does that megaphone pattern, like goes up and it goes down. So I didn't really like a lot of stuff here, but what I saw, it was that the price was bouncing from a strong moving average of the weekly chart, and also all the momentum was leading upwards. Why? Because there is a strong pattern that calls the Wyckoff pattern in trading, and when it takes a lot of time to be created, but there is a clear false breakout clue that this pattern is going to create it, and then the market creating what we call in technical analysis a non-failure swing bottom. And it's something that I teach to everyone, every single trader or somebody who comes and wants to learn how to trade this kind of market dynamics. It's something that I teach them all day long, and we get these accurate entries no matter what. Okay. The method, it calls Wyckoff methodology. It's one of the most difficult methodologies to learn, but again, I don't pay attention to trade Wyckoff, but when I recognize few important patterns that the market is dropping drastically and then it consolidates, and at some point it creates a false breakout. We don't know if this is going to end up a false breakout, but after we see the market made a higher high, and it made a higher high upon this kind of market behavior, it makes it a more predictable for at least to try and get bullish opportunities. What I try to do here, I try to draw the Fibonacci from here to there, and let's put the default. So from this point to that point, and I had a pending order at 61.8%. I don't trade anything less than this one when it comes to pending orders. But the price created this spring here around the 50%. And as I said, I primarily trade the New York trading session. So when I started looking for trading setups, I found that the price was around here. I entered based on this one. I put a stop loss there, and that was another 2-to-1 trade. So pretty much it was, last week it wasn't an easy week, to be honest, for me trading this stuff, but it played out quite well. Next one, the euro against the Japanese yen and the Great British Pound against the Japanese yen. So the euro against the Japanese yen, it had a bearish engulfing on the weekly chart. And we said based on that, and also we said based on something else, that the European Central Bank was about to cut interest rates drastically, and that could have a negative effect on the euro. And we said, let's look for short opportunities. Surprisingly, the other currencies against the euro, they didn't outperform the euro. Neither even the euro outperformed the US dollar, which it was very surprisingly. But despite that, the Japanese yen, we said last time it was a strong currency. So downtrend on the euro yen, bearish engulfing on the weekly. It gives us the clue that during the next week, we're going to primarily be looking to trade as sell opportunities. Now, we need to have a trading plan to trade sell opportunities. There were a couple of trades here as the market was dropping. This one here was a failure, but it made, I was looking, actually, I didn't take any trades on this one because I didn't find something to stand out the times I was looking to trade. And plus, when I found a few opportunities to trade this one, I was already trading the Japanese yen with the US dollar, and I didn't want to add extra positions. It means to increase my account risk. This bearish engulfing here, though, when I was looking to trade this one, if you measure, if you enter here and you put your stop loss above there, and you want to go for a 2-to-1 by the time the price is going to reach this swing low, that doesn't go even to 1-to-1. So it was extremely low probability trading setup. And as I said, and I explained you many times here, the way you do anything in trading is the way you're going to do everything in trading. The way you trade an account with $100, it has to be the same way you have to treat an account of 10,000, 100,000, and a couple of $1 million. So that's how I approach trading, and that's why I'm been here 12 years, and I survive and I thrive in the markets because I'm extremely disciplined to the letter. I don't mark around with my entries. I don't mark around with my exits. I don't mark around with my lot sizes. And I will show you something that if you really want to develop yourself as a trader, that you can trade and make money from trading. And our signals we send on our traders, when they send the signals on the groups on a daily basis, they do exceptional well. But if you are looking also to take your trading in your hands, you need to pay attention to what I'm teaching you here, okay? Because I'm giving you everything that you need. Some people, they say, Theo, you are why do you give like this everything for free, and you also have coaching, and you offer coaching, and you offer like one-on-one or group coaching, or you teach people how to trade? Because you are here, and within this hour, I want to give you everything. I want to give you everything that's going to help you to progress as a trader. But I cannot teach you, on the other hand, every single thing you need to know. So again, from this hour here and every Sunday, it's very limited the amount of time to teach you how to become and thrive in the market. That's why I offer the coachings. If you want to get some support, some help, feel free to reach out to me. That's not a problem. Now, what I would like to show you before we move forward is something that I experienced last week in trading, and it's, if you understand this thing, it's going to help you a lot. Okay, so last week, based on my analysis on the US oil, I was looking to be a buyer here. The price started making higher highs and higher lows, and I was looking to buy. So this candle here, this candlestick here, the one that ending up as a bearish engulfing candlestick, before the completion of this candle, it was a bullish engulfing candle. So I opened a trade as a buyer here, and I had a stop loss right there. And I was looking the charts. I was actively trading that time. The price did that dip down here. It took out my stop loss. I was out of the market. And at the same time, I see the next candle start moving upward and coming almost at the previous candle's high after it created an equal low right here, which means that most likely now the market is ready to move upwards. So this is what the traders, they faced as one of the biggest challenges. And that's where you need to develop discipline in trading if you want to thrive and become a successful and profitable trader and a professional trader like myself and many others that I know in the industry. So when I saw that the price is about to take off, I was scared to take the trade again. I'm a human and I live with all the emotions that every other human lives with. So when I had to make the call, was I feeling uncomfortable? Of course, because when I trade my accounts, again, I trade some prop firms accounts, I trade personal account, I trade others people's money and I have responsibility on that. And when I had to make the decision to take the trade, was I scared? Of course. Was I occupied by all the emotions of fear, uncertainty? Of course. But because I'm a skillful trader, I know how to understand them, to accept them, and to know that they will always be there with me as a trader. So many traders in this case, they would have doubled their position size. I trade in every position size I open, it's more than 4 and 5 figures. Okay, that's the scale of the trading activity I conduct on a daily basis. So when I had to make this call, I was saying, okay, I got a losing trade here. All my accounts, they experience a losing trade. If this is going to be a winning trade, if I double the money, I go for 2 to 1, it means that I will cover the loss plus with a profit. But what if I double also the lot size I will put on this trade? And this is what many traders, they do. They don't see the reward to risk. They see how to revenge the market and how to put more risk on the next trade in order to make more and more money, because they are upset because they experience a losing trade. But for me, it wasn't the case. I scratched this and I said, yes, I will take the trade with all the consequences. If the price won't move upwards and it's going to come there, it will take again my stop loss. I will be in a losing trade. I never mark around with a stop loss. I don't track stop losses to save the trade. I don't delete stop losses to save the trade. And I let the market reach. I'm not going to say I found the top, but it happened. And my analysis with Fibonacci extension, it was somewhere there. So it covered a lot. But what the message I want to pass on to you guys is, you must accept every single thing that comes with the market. Or another losing trade I took last week, it was this one. Was it last week or 2 weeks ago? Where it is? Where are you? Come on. Where are you? I'm pretty sure it was somewhere there. Oh. Anyway, I had a losing trade. It was it here? I think it was there. No, it wasn't this one. Anyway, I have to go through my log and find that losing trade, because it was again very emotionally distracted for every trader. Okay, so I hope that you got some valuable message out of that in how to behave if you want to become a successful trader in trading. Okay, next in our watch list, it's going to be the Great British Pound against the Japanese yen. So on the weekly chart, again last week, we explained that we are expecting this bearish engulfing to move forward, to push the price down, that it did. And now we're going to have to change our lines and put the support a bit lower. Next Thursday, so after 4 days from today, in the UK, the Bank of England is expecting to keep their interest rates at 5%. They is very unlikely to proceed with a rate cut, but again, if the rates remains at 5%, this will be perceived as a negative thing for the currency. So it's going to have a negative impact on the currency. Okay, so if it's going to have a negative impact on the currency, we expect, and if the market will follow through, we expect to see more weakness on the Great British Pound. And on the hourly time frame, I will keep scanning the market to find this formation, lower highs and lower lows. Now, because the market here, ladies and gents, it made a higher high formation. So now don't get misled by what you see here and thinking that, you know, we are in a downtrend. We are not in a downtrend, because if this price managed to break the structure and start making higher highs and higher lows, we want from now this low point to be broken. We want the price to penetrate and passes through this swing low before we continue looking for long short positions. Okay. Again, I don't expect you to remember all this stuff and memorize them and understand them, but I will definitely encourage you to pay attention to this. And if you need some more help, don't hesitate to ask me. Let me read some of the questions. Abdul said, yeah, you can send me a message. Yeah, that's fine. Write it down. What time is Asia session and London and your trading session? Depends in your time zone. I will say that based on the Eastern European Central Time, Eastern European, yes, Standard Time, Central Time, what do you call it? That where I am anyway. Okay. 12 a.m. my time, it's the Sydney session, then 3 a.m. my time, or your broker's time, which usually they use Cyprus, that's their resetting time. 3 a.m. starts the Asian session, then at 10 a.m. my time, or I think it's 8 a.m. London time, UK time, it's the London trading session. Then at and the New York trading session starts, I think it's 3 p.m. my time or 3:30. But when I start looking for trading activities, I always start when the stock market kicks in the US. Jacob said, hi. Greg and Christelle said, the reason why you are so successful is because you give a lot of free and don't expect anything in return for it. It's the way you get blessed. Thank you so much. What about gold from Philip? Yes, we're going to go through gold. Krishna said 15 minutes or 50 minutes. You said the best time frame for us to view charts on. Thanks. I use the hourly time frames. I think I didn't say 15 minutes. How do we improve mentality in trading? Oh, this we need a lot of, we need to talk specifically about it, because what at the beginning people they think they need when it comes to how to put their mental framework well, it's not a generic thing. Every single person goes through different stages and stuff in their life. So something that triggers you and makes you behave not as a professional trader will behave, let's say, it has been maybe different from somebody else challenge. So it's something more personalized, that one, to be honest. And when people, they go out and they start saying, this is how you fix your mentality in trading, and this is how, I don't have any one of the professional traders I know that we went through the same issue. Maybe at the end, our mistakes, they have a lot of similarities, but the way we understood and we went through the difficulties, it was based on each and every one of us, the way we could understand ourselves better. Okay. So, but it's good to have generic stuff. Let's check the gold, of course. Gold for today, all-time high. So, it's been a couple of weeks on these webinars that I mentioned. Price is in an uptrend. The market overall is in an uptrend. Price makes all-time high up to this level here. Let me share something with you. In a strong uptrend, if you see on the swing high that it's gonna likely to start the retracement, and you see the market that it doesn't melt, the sellers are not there. Nobody is willing to sell the market and smash the price. If you don't see this happening, it means the market is not ready yet for a reversal. It's an art to understand how to separate the retracement from the reversal in the market. Everything that you think and you see on the internet that it's very simple and they teach them at First Place, all my students, they sit there for hours to make sure that not only they're going to understand them, but they're going to be in a position to trade them. So as we explain, it happened here and there. Specifically, we explained about these two some time ago, that bearish engulfing from resistance. If the price doesn't continue, there is a weakness from the sell side to push the market lower, and most likely we're going to see the resumption of the trend. I said most likely because nobody knows what's going to happen. And this one here, it was very prominent as well. And we were looking to go short, but after a week, we saw the market, it was saying, no, I'm not going there. Also here, we said, hey, inside of the inside, let's wait for a clear break, because again, you don't know what's going to happen, because indecision candles, dodgy candles, they are there for a reason. They create some kind of pause in the market direction if the market is trendy. So on the 4-hour chart, we had a nice solid breakout above this previous all-time high. Yeah, that's the gold, XAU USD, correct? And since then, the market just kept rallying. On the hourly time frame, the price created some kind of these shallow swings, but very little selling pressure in the market compared to all this bullish pressure here. Now, in this particular one, we measure the swing from this point A to the swing at this point B, and we find out that around this area here where the market had the breakout, there is what I teach to people, the fair value prices. It's not a fair value gap. The gap is something else for those that trade smart money concept. This is a fair value price. There is an inside support, something you will not find it anywhere because anyway, this is an inside support and it's a very strong. And also there is a 4-hour bullish engulfing candlestick here, and the bullish engulfing candlestick, it has usually the middle part of the candlestick to hide the most prominent volume, and everything at this point aligns perfectly around this price level. Now, would we gonna wait for the price to make this and then to buy? Well, if you are trading on the lower time frame, absolutely not. You're gonna start looking on how to capitalize on the lower time frames. But if you are trading as the price drops, but if you are trading like me and you want to be patient and disciplined in trading, if you are watching more markets than the gold, there are some traders like our traders, they send the signals every day. They are focusing only on the gold. They become experts on the gold. That's why they move from time frame to time frame and they do this stuff. So that's a different approach. They try to capitalize on momentum trading there. Okay. And for Bitcoin lovers, including myself, and as I said many times, I prefer to invest in Bitcoin rather than just trading it as CFDs. So on the weekly time frame, I didn't clean up the charts. Anyway, on the weekly time frame, the price created a higher high here. Anyway, it's more bullish than bearish on anything on this one now. We are moving closer to the US elections, and everything that, even when someone opens their mouth and say hello, the markets react. Okay, if a politician goes out for a speech and say hi, the markets, they do whatever. So more bullish than bearish on the gold. Pretty much that's it. The rest of the currency pair, honestly, this week they are like the cross pairs. They are expected to be a little bit mixed. Okay, it's been a few weeks we were focusing here. Now I think it's time to go back and focus mainly on the major currency pair, because that's where we expected to see some more predictable moves, some trends. All right. So I don't see any other questions coming in. I would like Lucas at Cooper. Okay, Cooper, let's do the last one. Cooper, let me see where I hide the Cooper. It's down here. Now, the reason I don't usually trade the Cooper, it's because it has large spreads, and unless you trade it on the daily chart, even 4-hour chart has quite large spread, but it depends. If that helps your trading account, absolutely, by all means, you do it. The Cooper is primarily in this downtrend. At this point here, it didn't follow through the downtrend and it created a swing low, which means we expect push to the upside. You have to mark the 4.3 something here, 4.319 as the resistance right there. And on the hourly or any other time frame, I believe as this is in an uptrend, we can keep, or you can keep looking for bullish opportunities. So more bullish than bearish. Moses asks, how can we new traders improve our chances of making profit? Look, when I first started trading, I always had a mentor. I always had a coach to teach me first, to learn from the coach, and to keep me accountable. I mean, it's, if you want to become successful in something, tell me one professional athlete who goes to the field, to the track, or to the gym, and they don't have a coach. All have a coach. In trading, why it has to be different? I had a coach. Other people now hire me as their coach. It is what it is. So you need to sit with someone to get his or her experience, to learn few things. It's a big part that you have to take in consideration, and it's an investment in your trading career and to become successful. Of course, I can show you how to use Fibonacci, but now we are running out of time and I have to wrap up. How do you find the strategy for you? After 12 years, I found how I can trade. But if you want, we can see how do you adapt to some strategies and we can tailor a strategy for you. That's not a problem at all. Abdullah said, thank you for the market breakdown. You are very welcome. So everyone, I think it's time to say good night to everyone. Oh, good morning for those that are on the other side of the world. Again, it was a privilege and honor to have this webinar for you guys here. I hope you enjoyed. I hope you get some value out of it. I hope this is going to help you to develop yourself as a trader. You can just, if you need something that I can help you to learn how to trade or to help you with some coaching, perhaps, feel free to send to reach out to me. That's not a problem at all. Okay. Adriana said, ευχαριστώ, καληνύχτα. You are very welcome. So just feel free to reach out and let me know if you need something. I'm happy to discuss with you. We can go on a call to tell me what you need, what you do, and maybe it's going to be just a 5, 10, 15 minutes call and that's it. I mean, no obligations. We are human, guys. We are not something. I'm a human like you. I'm happy to help you. Let's see if I can help you. All right. So again, I wish you to have a lovely evening, lovely afternoon, lovely night. Happy trading and good luck with your trading next week. For those they won't reach out to me for any question or something. I will see you all next Sunday at the same time. Thank you and bye to everyone.